Okay guys, so welcome to episode 3 of our Traders Workshop, and in today's episode we're going to be talking about the COT report, which is a very important indicator to tell us how the professional market is positioned across a multitude of assets. So I've created an Excel spreadsheet and I'm going to show you how to go and find this data online, download the data, implement it onto an Excel spreadsheet, and what the spreadsheet is actually showing you on a week by week basis, how many contracts are being bought to either sell a currency or buy a currency in the markets, and is the market bullish or bearish on a currency? Is the market bullish or bearish on commodities? Are they bullish or bearish on indices? How is the professional market positioned? Now this is so important because what you can see on the Excel spreadsheets, when we go back historically and look at the COT reports, you can see, for an example, how a currency pair literally uses the COT reports to start trending in the markets, because it's the only way that a professional market can know how the rest of the professionals in the market are positioned on a week by week basis. So really important component. You can implement it on a week by week basis by yourself. The spreadsheet has all the links. You know how to download the data, and once you do know how to download this data, literally on a week by week basis, you can keep a rolling weekly update of how the market's positioned. And if that does then support your fundamental trade idea that you already may have in the markets, it's going to give you more confidence to know when to get into a trade or even come out of a trade, basically, in a trending market. So you're really going to enjoy this. Really excited to share this with you, actually. So we're going to go over to the computer screen. I'm going to break down the COT report for you in the markets. Thank you for watching. Okay guys, so welcome over to the computer screen, where we're now going to analyze the COT report in more detail so you can understand how to interpret the data, which is released every single Friday, to know how committed the professional market is towards buying or selling a currency, an indice like the S&P 500, for an example, in the market. So I've created this spreadsheet for you, and every single Friday you can go and download the data, input the data into the spreadsheet. The charts will automatically update, and then you can literally keep an eye on this data every single week, and you'll know when the best time to be buying or selling a specific asset in the market. So let me just break down the spreadsheet for you to give you an understanding of what you're looking at, and then we're going to go over to the internet. I'm going to show you how to download the data, and then I'm going to show you how to input the data as well. So in column A, we have the dates. In column B and C, we have the amount of leverage long positions and short positions, and this is looking at the Aussie dollar in the market. So this specific spreadsheet is showing us how committed the market is to buying the Aussie dollar and how committed they are to selling the Aussie dollar. So we have the amount of long positions that investors want to buy the currency, and how many short positions there are where investors want to sell the currency in the markets. Then we have the change in the amount of long contracts that are open in the markets, and this is on a week by week basis. So this is showing you the change in long contracts from the week before. So on a week by week basis, this is showing you how many long contracts have increased or decreased to either buy the Aussie dollar. And then we have the change in the amount of short contracts there are to sell the Aussie dollar. Now the contracts being traded are the futures contracts for a currency. So it's basically investors betting on the future price of the Australian dollar in the markets. And then we have the percentage change in long contracts, the percentage change in short contracts, and then in column H we have the flip, which is basically the difference between the amount of long contracts and the amount of short contracts. And this is telling us if the market is fully committed to either being long or being short the Australian dollar. And then I've gone and created a chart of the Aussie dollar against the US dollar, so I can show you historically how this plays out in the markets when we start to see the market flip from becoming either short the currency to becoming long, or if they're already long the currency, then it flips to becoming short. How that's the opportunity where we know the market's just changed their bias towards being long or short, and that's the opportunity for us to get in at the beginning of a trending market. So we have the Aussie dollar here, and we have the euro, we have the yen, we have the pound, we have the Swiss franc, we have the Canadian dollar, we have the S&P 500 index, and we have the US dollar index. which is looking at the market's commitment to buying or selling the US dollar. We've obviously paired up all of these currency biases against the US dollar as an illustration to show you the effect of the COT report will have on, for an example, the Great British Pound against the US dollar in the exchange rate. When you know if the markets are committed to being long or short the pound, we can see the impact that has on the pound US dollar commitment in the markets and the overall price and the exchange rate. So we have our links here in every single spreadsheet. So what we do is we go over to the Commitment of Traders Report website, which gives you a direct link. This takes you over to the website, and what you want to be doing is going down to the futures only reports, which is the second from bottom, and we want to be downloading 2020, and we're clicking on Excel. So this is going to download the data for us. We're then going to open up the data. Just waiting for this to upload. Give us a sec. So it's going to wait for the data to download. Not sure why it's not opening. Let's just go here. Go to downloads. Oh, here we go. And then we open up the spreadsheet that we've just downloaded from the internet. So I'm going to show you which columns we want to be downloading. So quite a lot of data, but I'm going to show you which columns you want to be downloading. And then we're going to know how to extract this data, put it into our charts. So we put it into our spreadsheets, and then it's going to update the charts. Then we're going to be able to track on a week by week basis how committed are the markets to buying a currency, selling a currency, buying the stock markets, selling the stock markets, and then we can get some trade ideas in the market. So what we want to keep our eyes on is column C. So we're going to highlight column C. This is the dates on a week by week basis to tell us which is the latest data we want to be downloading. We're going to download column O and P for the leverage amount of long positions and short positions. We're going to download, you want to highlight column AF and AG. And then we want to go over and highlight the column AW and AX. So once you've highlighted these columns, what we can simply do is highlight the columns in between each of these columns and literally right click and press delete, and we get rid of the data that we don't need, and we only keep the data that we do need. So we go across, right click and delete, go across, right click and delete, go across, right click and delete. So now we have the data that we want to download. Actually, hold on, we want to get rid of column B actually, because we don't need column B at all. Okay, so now we've got all the columns we need. I just highlight them, I just drag in between column D and E, and that will separate the data open even more so it can be exactly how we want it to. And then what I can do as well is just change the color back to normal, because we don't want it to be highlighted when we download it. So there we go. Now we have all of the currencies along here. We have the Canadian dollar, okay, which we can see here. We have the US dollar, Swiss franc, and we have the pound against the US dollar. So all we're going to do, if you want to download the US dollar, sorry, we want to download the Canadian dollar data, all we're going to do is go over to the data that we've just downloaded. We're going to download the latest week's data, as you can clearly see here. Then you're going to copy it across the 4 columns that we need. We're going to highlight the data, go over to our spreadsheet, and we're going to input the data into our columns, and then you're going to center the data, and then you're just going to drag down the previous week's flip, and then you're going to just copy it down, and it's going to give you the latest flip data. Then literally all you do, we've done it for the Canadian dollar, so this is basically showing you every single week in 2020 so far, which is all the data which is already in here, which I've already done for you. Just on a week by week basis, you're going to go and you're going to insert the latest week into the column. Then you're going to do the same for the Swiss franc, which is the next column along, and you're going to do it all the way across for all of the currencies. And then when you get to the bottom, you're also going to do this for the indices. So you can see we have the Dow Jones 30 industrial average, which is US stock market. And we also have here the S&P 500. So when we get to the S&P 500 data, all you're going to do again is do exactly the same as what you did recently, as I've done for you recently. And you're just going to take the latest reading of the week, which is here, which you can clearly see here, I've already downloaded again, and you're going to put the latest week data for the S&P 500. So you're using this one, not the S&P consolidated, you're using the S&P stock index. And then again, for the US dollar index, which is telling you how committed the market is to buying or selling the US dollar, you're literally just going on the spreadsheet and you're looking for the US dollar index download, which is this one just down here. Just want to make sure I take you guys to the correct one. Here you go, US dollar index, and then you download the latest column. So once you downloaded the latest column, you've got all your data, you've updated your spreadsheets. Okay, now the most important thing is when you're looking at this data is, how do I interpret this data and how do I know what this is telling me? So as I said, when you take the percentage of long contracts, which is all of the long contracts, and then you take the percentage of all of the short contracts, we have a column H, which is the flip. And this is when you either flip from going short a currency like the Great British Pound to becoming long a currency, or you flip from being long the currency into short the currency. So when it's positive, it's any reading above zero is showing you that the markets are committed to buying the Great British Pound in the markets. When you get a minus number, it means the markets are committed to selling the Great British Pound in the markets, because what you're doing is you're taking the long contracts minus the short contracts, the percentage change on a week by week basis, and we're seeing if we're bullish on the pound or bearish on the pound. And what you can see is clearly is when the flip highlighted in brown goes from being short to long, you then see the pound rise against the US dollar in the exchange rate. You can clearly see that correlation here. And then when the flip goes negative, the pound is already starting to weaken against the US dollar. So obviously the trend has to be in play in the markets. We do have to take technicals into consideration if you're doing technical strategies to get into the markets. But what we're seeing is when the flip goes from being long the pound into being short the pound, we see the pound US dollar really trending to the downside. And then when we see the flip go above, when we see the commitment of the market for being short the pound to being long the pound, then we see the pound US dollar really rising in the exchange rate. When we go back to being short the pound, you see the pound getting weaker against the US dollar in the market. So clearly you can see there's a very strong correlation to the Great British Pound US dollar exchange rate and the COT report data, because the COT report data is actually telling you every single week how committed the market is. So what you want to do is you want to understand the fundamentals driving the markets in the first place, which is always going to be how much inflation are we getting in the UK relative to the US, and then how likely are there going to be interest rate hikes or cuts in the United Kingdom compared to the US, because interest rates are a key driver for currency pairs in the markets. But the COT report is going to confirm our bias towards either wanting to buy the pound or sell the pound if we're trading the pound against the dollar, for an example, because the COT report is telling you every single week how committed the market is. So what I have here, the second link, is taking you to the data of the dollar bottom here, and then the chart updates. One thing you want to be doing is understanding that the data that we're looking at, if we're looking at where the data is, how much of that, as you can clearly see here, we have the flip data. Just make sure on average that the flip data is incorporating, for an example, an extra 5 weeks on top. So just take the data down to, like, if it's at 138, take it to 148 to make sure that every week when you update it, the charts are updating. So I just have like 10 rows ahead in them all the time when we're updating the data. So just do that for all the currencies to making sure your charts are always updating. And then once you get down to 148, you can then change it to 158 and your charts are always updating. Another thing to pay attention to is the dates. So just if you click on the date column, it will come up here. And what you really want to be doing, sorry, actually don't need to do that. My apologies. It always updates the dates along with the columns that you're analyzing. So sorry, apologies for that. But one thing we want to notice is there is the 0 mark, which is the flip when the markets flip from becoming short to being long or long to being short. But then we have these areas here. We have these two areas around 30 and around 60 in terms of the market being committed to being 60% long the pound or 60% committed short the pound. And what these two levels are telling us is when the market gets really committed to being bullish the pound, it is said that when you get above 60, it means the pound's gains have been overextended. The market is overly long the pound in the markets. And when you get to these levels, you do historically see, as I'm showing you here, the flip data really stays within this range. The currency pair can go outside of the range because, as we can see, we have the pound dollar exchange rate on the right hand side and you have the flip data on the left hand side. But if you look at the flip data, it always stays within the bounds of 60 and minus 30. If you can see, going back to 2010, the flip data stays within this range, because what it said is that when you get to around 60% committed in the market, this is very, very bullish the pound, and you're likely to see the markets run out of steam around these levels, and then the pound starts to drift lower. Each and every time, look, we get above 40, the pound starts to go lower against the dollar. The commitment of the pound starts to go lower, and then the pound dollar exchange rate starts to dip lower from this point. And whenever you get to the bottom end of around minus 40, you start to see the pound rising back up higher as well in the market. So we don't want to be buying the pound when the market is extremely committed to being long, and we don't want to be selling the pound when the market is extremely committed to being short. We want to be buying the pound when the flip is telling us the market has just flipped from being short to being long. So whenever we see this situation occurring, when the market has gone bullish on the pound from being bearish, that's our time to buy the pound against the dollar. As you can clearly see, that's the time to get in here again, and we get the trend. Or when the markets go short the pound and the commitment is to be short the pound, that's our time to go short the pound against the US dollar. And you can see the same for, say, for an example, the Aussie dollar, US dollar. Again, here you can see when the markets flip from being long to being short, the Aussie dollar weakened against the US dollar. And then when the market flipped back to being bullish, the Aussie dollar against the US dollar, the Aussie dollar rose against the US dollar and became committed to being bullish in the markets. And again, you can see the markets stay within the range of minus 30 to plus 60 in terms of commitment in the market. So there you go, guys. You can do this for the US dollar index. You can do this for the S&P 500. You can do this for all the currencies, but take the data, update update the spreadsheet every single week. Keep an idea of how committed the market is on a week by week basis. Keep it in your phones or wherever you want to be. When you analyze this, you have the links for every currency pair against the dollar, and then you have the links for the data for you to download. But make sure you keep this spreadsheet updated, because remember, you need the market to be on your side to know when to buy a currency, sell a currency, or buy the S&P 500, or buy the US dollar, or sell the US dollar. You need to know how committed the market is, because it's the professional money, the big institutions, the hedge funds, the investment banks that are going to drive the market, because they're trading huge amounts of capital in the markets, billions and billions at a time. So there you go, guys. That's the commitment of Traders Report. You got the data, download it, keep it updated. Make sure you never ever miss a week, because you may miss the opportunity for when the markets just become committed in the markets. And if you don't have this data at your disposal, you don't know which direction the market is trading. So you may look to sell a currency pair when really it's just a pullback within a bullish trend, or you may look to go long a currency pair when it's just a pullback within a bearish trend. So this is very important to get down and understand. So I hope that makes sense, guys. Thank you for watching the COT Report Analysis.